A seismic shift is underway, one that could redefine the very foundations of global finance as we know it. Across continents, markets are bracing for the impact of a new player that's shaking up the status quo. China has launched the eCNY, a digital currency poised to channel up to $1.2 trillion in global trade, bypassing decades-old systems and introducing a new era of digital transactions. This isn't just a tech upgrade. It's a strategic move to reshape how money and power flow worldwide, with implications that reach far beyond China's borders. The digital yuan could make cross-border trade faster, cheaper, and more direct, challenging the US dollar's dominance and the SWIFT network that has long been the backbone of international payments. For decades, the US dollar and SWIFT have ruled international payments, giving the US significant influence over global commerce and even geopolitics. Now, China's eCNY is the most serious challenger in a generation, offering an alternative that could shift the balance of financial power. Unlike cryptocurrencies, the eCNY is issued and fully backed by China's central bank, aiming to create a parallel global payment system that is both secure and state-controlled. This new system offers countries, especially those in China's Belt and Road Initiative, a way to trade and settle payments without relying on Western financial infrastructure, potentially reducing exposure to sanctions and currency risks. As the digital yuan gains traction, it's forcing the world to rethink what a multipolar financial future could look like. One where power, influence, and opportunity are more widely distributed than ever before. To grasp the digital yuan's impact, we need to understand SWIFT, the backbone of global finance for decades. SWIFT isn't a bank, it's a secure messaging system connecting over 11,000 financial institutions in 200+ countries. When you send money abroad, SWIFT transmits the payment order, often through a chain of intermediary banks. Each bank takes a fee and adds delays, so transfers can take days and cost more than expected. Built for a pre-internet era, SWIFT's inefficiencies are glaring in today's fast-paced world. Its central role also gives the US leverage. Being cut off from SWIFT can isolate a country from global finance. This power has motivated China and others to seek alternatives. The digital yuan is China's answer to SWIFT's slow, costly, and politically charged system. The eCNY operates on a radically different principle. Real-time, direct transfers between digital wallets, no intermediaries. This means that transactions are faster, more efficient, and can be done at any time of the day or night, without waiting for bank hours or clearing times. The eCNY is designed to be as convenient as cash, but with the added benefits of digital technology. Project mBridge brings this vision to life, connecting central banks from China, Hong Kong, Thailand, the UAE, and Saudi Arabia. This collaboration aims to create a seamless network for digital currency transactions, making cross-border payments as easy as sending a text message. On mBridge, central banks issue and exchange digital currencies directly, enabling instant low-cost international payments. This eliminates the need for correspondent banks, reducing fees and delays, and making the process more transparent and secure. The platform uses distributed ledger technology for transparency and security, with each central bank validating transactions. This ensures that all transactions are recorded in a tamper-proof ledger, providing a high level of trust and reliability. A business in the UAE can pay a Chinese supplier in digital dirhams, instantly converted to digital yuan, and deposited in seconds. This not only speeds up the payment process, but also reduces the risk of currency fluctuations and exchange rate losses. This streamlines cross-border payments into a single SWIFT operation. Businesses can manage their finances more efficiently, and consumers can enjoy faster, more reliable services. Project mBridge already has dozens of observer nations, especially from ASEAN and the Middle East. These countries are keen to explore the potential of digital currencies and how they can transform international trade and finance. While claims of massive trade bypassing SWIFT are premature, mBridge is building the foundation for a new global payment paradigm. This could eventually lead to a more inclusive and efficient financial system. It's a working model of what a post-SWIFT, multi-currency world could look like. The future of global finance is being shaped today, and Project mBridge is at the forefront of this transformation. The digital yuan is already in use for international trade, especially among China's closest partners. Chinese energy giants are using eCNY to pay for oil and gas from the Middle East and Central Asia, sidestepping the US dollar. Thailand, a key M-Bridge participant, is piloting eCNY for trade with China, making transactions faster and cheaper. The UAE and Saudi Arabia have joined M-Bridge, strengthening ties with China and diversifying away from Western finance. Kazakhstan's launch of a yuan-linked stablecoin signals the currency's growing regional influence. China is embedding the eCNY into its Belt and Road Initiative, encouraging its use for loans, contracts, and trade across dozens of countries. This strategy is building a captive ecosystem for the digital yuan, boosting its credibility as an international currency. China's push for the digital yuan is about reducing its vulnerability to US financial power. The digital yuan is not just a technological innovation, but a strategic move to gain more control over its financial system and reduce reliance on the US dollar. The world runs on a de facto dollar standard, giving the US enormous leverage through SWIFT and sanctions. This dominance allows the US to influence global financial transactions and impose economic penalties on countries that do not align with its policies. China sees this dependence as a strategic risk, especially in potential conflicts or disputes. In times of geopolitical tension, the ability to operate independently of US financial systems becomes crucial for maintaining sovereignty and security. Creating an alternative system is a matter of national security for Beijing. By developing its own digital currency, China aims to build a financial infrastructure that is less susceptible to external pressures and more resilient to global economic shifts. Economically, relying on the dollar exposes China to US monetary policy swings, which can destabilize emerging markets. Fluctuations in the dollar can lead to economic instability, affecting trade balances and investment flows. By internationalizing the yuan, China aims for more stable trade and less exposure to currency risk. A more widely accepted yuan can facilitate smoother international transactions and reduce the costs associated with currency conversion. The digital yuan is part of China's vision for a multipolar world, with new institutions and payment rails outside Western control. This vision includes creating a global financial ecosystem where multiple currencies coexist, reducing the dominance of any single currency. It's a financial instrument designed to power a new global order, one where the yuan, not the dollar, sets the rules. This shift could redefine global trade and finance, positioning China as a central player in the international economic landscape. The digital yuan's biggest advantage? Speed. Traditional cross-border payments can take days. With eCNY and M-Bridge, they settle in seconds. This efficiency slashes costs by eliminating intermediary banks and their fees. Small businesses and developing nations benefit most, gaining access to global trade through simple smartphone apps. For workers abroad, digital yuan payments are faster, cheaper, and more secure than traditional remittances. The eCNY also enables programmable money. Payments can be automated with smart contracts, releasing funds when shipments arrive. This reduces fraud, cuts paperwork, and streamlines complex trade finance. Billions could be saved globally, making international trade more accessible and efficient. The digital yuan is not just faster, it's smarter, opening new economic opportunities worldwide. The digital yuan's rise brings big concerns, especially about privacy. Unlike cash, eCNY transactions are fully visible to the Chinese government, raising fears of surveillance and data security. Western countries worry China could use transaction data for intelligence or to bypass sanctions. Regulatory hurdles are steep. Every country has its own rules, and harmonizing them is a massive challenge. The US sees the yuan's rise as a direct threat to dollar dominance, risking a split into rival financial blocs. Trust is another barrier. Many are wary of holding a currency controlled by a government known for heavy market intervention. Building global trust in the eCNY will be China's toughest challenge yet. The digital yuan's journey is just beginning, but its impact will be global. Project M-Bridge will expand, more countries will join, and trade outside the dollar system will grow. Businesses trading with China will see lower costs and faster payments, but must adapt to new risks and technologies. For consumers, cheaper imports and faster remittances could become the norm. The bigger shift is geopolitical. A world with competing financial systems could be more fragmented and less stable. The rules of global finance are being rewritten, affecting everything from trade to savings. The digital yuan is about more than technology, it's about power and the future of global order. The way money moves is changing forever, and we all have a stake in what comes next.